Hey guys, how are you? My name's Adam Jason. I'm the founder of BRRRRinvest.com. I want to make this short video today to talk about the recent fee hike that is going on in the refinance mortgage. Obviously, particularly relevant to us as BRRRR investors. So if you're watching this video in August 2020 when it's coming out, recently Fannie Mae and Freddie Mac have said that for refinance mortgages, and for those of you who are not familiar, Fannie Mae, Freddie Mac are government arms that buy a substantial portion of the mortgages that are issued by traditional lenders in the US. What they've said is that for refinance mortgages that they buy, they're going to charge an additional 0.5%, 50 basis points to the lenders that they buy those loans from. So what does that mean for us? It means it's going to be passed on to the customer, and that means us as BRRRR investors. If you're watching it now, it's particularly relevant. The news came out last week. If you're watching it down the road, still relevant as we think about what the fees are going to be that you should be considering as a BRRRR investor when you're doing your calculations and determining whether it's a good idea to refinance your properties. So from a high level, and just to give some background, obviously the BRRRR strategy and the one that we all love and use for our real estate investing includes buying a property at below market rate, rehabbing the property so that you drive the value up, so that you're positioning the property to be able to refinance and get your money back. You get a tenant in there usually for 6 months to a year, and then you go to the bank and say, hey, I've added so much value to this property, I'd like to get my money back. And they'll issue a refinance loan for 75 to 80% of the value of the property at the time that you go for the refinance. In addition to the principal amount that you're going to have on the loan that you take, you're also going to have to account for closing fees and those kind of things. So this is where this new rate increase comes in and impacts our financial returns, because it's essentially driving up the price of our closing costs. We can have the discussion of the policy behind this and whether it makes sense, given that at the same time that you have fees going up, you have interest rates being lowered to an all-time low. The average right now on a fixed 30-year purchase mortgage is sub 3%, but at the same time on the refinance side, you have Fannie and Freddie driving up the cost to consumers. So it's a policy discussion we have, but what I really want to focus on is how does the math impact your portfolio and the next refinance that you're considering doing, and those down the road if this fee is not overturned. So let's look at it this way. So people are saying, oh my gosh, how much does this cost? What's it going to cost me over the long term? I want to discuss both the impact on the rate that you're going to pay and also the overall cost to your project over the long term. So if you're taking a $250,000 refinance mortgage, you're going to pay in closing costs attributable to this additional fee about $1,250. That's going to be the 0.5 percentage point increase on that loan. What's that going to do to your rate? Well, if we look at the current average rates in the market, let's say it's 3%. I think I saw today that it's about 3.4% on a refinance mortgage. It's going to add about 1/8 of a percentage or 125 basis points to the cost of your loan. So it's going to be about 3.125 instead of 3 with this additional cost. In terms of putting it in dollars, of course, what we really care about, if you're looking at a fixed mortgage over the course of 30 years at 3%, it's going to add in additional interest about $650. It's $647.22 to be precise about it. So what does that mean for your project? It's really going to cost, once you pay back that initial principal of $1,250 plus the additional interest, about $1,900 on a $250K mortgage. So people will think, okay, that's not too much. What does that mean for me? As a BRRRR investor myself and somebody who looks at this from a long-term perspective and doing deals over a long period of time and many years, this fee to me is not going to be something that I would let stop me from taking advantage of a great opportunity that I saw. I would adjust my price, and it's got to go to somebody. So I guess In this case, it would be the seller. So in my next offer and offer down the road, I would try to make up for that $1,900 by reducing my offer price on another property. And it's going to be the same thing. We're always going to be fighting against increased fees. Sometimes they might go down as technology improves. There's some speculation in the market that lenders aren't going to have quite the amount of leverage they've had in the past as technology improves and fees start to go down. So it's always going to be a battle that we have against fees and dealing with those kind of things. Still, the fact of the matter is that even at a 3.125 or 3.5% interest rate, you're getting into that free money territory where your portfolio should be so far outperforming that loan that you shouldn't let these kind of fees stop you. I mean, not too long ago, people were having incredible success with the BRRRR strategy and buying real estate when their loans were at 6.5%, 7%. So we're less than half of that now. So it's a great time to start your wealth building. Take advantage of the cheap money that's in the market and keep growing your portfolio. Don't let something like this stop you. Adjust for it with your next offer and make up that $1,900 in another way. It's not going to throw you off your goals or off track. At BRRRRinvest.com, we've already updated our analysis tools to account for this new fee so that you are going to get an accurate assessment of the closing costs that you're going to pay on your refinance. I bet you we're the only ones in the market now with BRRRR-specific analysis tools that are completely up to date for this change. So I hope you go there to BRRRRinvest.com, check out the analysis tool, run the numbers on your next deal, see how this change is going to impact your next project. Take advantage of all the tools we have there. Let me know your thoughts, comments, how you think this is going to change or not change your approach to investing in the near term. And I look forward to seeing you in the next video. Thanks.